FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Today's show is brought to you by Blue Sky Uranium Corporation. Blue Sky has first mover advantage in Argentina in the world's newest uranium and vanadium district. With an existing near-surface deposit that's open for expansion, Blue Sky also controls a massive district-scale land package with mineralization along a 145-kilometer-long trend. Blue Sky possesses tremendous exploration upside and is an excellent leverage play on rising uranium and vanadium prices. The company is run by a best-in-class management and technical team with proven exploration and development success in Argentina. Blue Sky Uranium trades under the ticker symbol BSK on the Toronto Venture Exchange and as BKUCF on the OTC. For more information and to stay on top of the latest news, go to blueskyuranium.com. That's blueskyuranium.com.
The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's tax day 4/15/19. Make sure you get those extension forms in if you're like me. That's what I do. Go for the 6-month extension. Tried and true strategy. Well, in any event, as always, if there's something that interests you on the show, something that sparks you, or if you're a millennial, something that triggers you, please email us, kl@kerrylutz.com. We answer all, about 100 emails behind right now after my recent trip to the Big Apple, but I am back now in not so sunny South Florida. Well, is there an independent Fed? Is that a myth of Fed independence? Well, what is going on with the Fed, and are they marching to Donald Trump's orders? Well, our good friend David Scranton is with us now, and we've heard him here before. Well, David, it's great to have you back on. So what's going on with the Fed here? Are we seeing them just become an appendage of the Treasury, of the executive branch of the government going against their mandate?
Well, I'm not sure whether it's one extreme or the other, Kerry. It's funny. It's actually that they're becoming an appendage and cooperating by going back from tightening instead to easing, or it's actually the opposite. You know, I always wondered what they were going to do as they flattened the yield curve over the last year or so, raising short-term rates, raising them more and more and more, when long-term rates were not, they raised about half as much. So every time they'd increase short-term rates by a quarter point, long-term rates would only go up by about a tenth. And the yield curve got flatter and flatter. And I thought, well, what are they going to do when they get to a point where it's flat? Well, in December, they couldn't raise short-term rates anymore. The bond market pretty much, in so many words, stopped them. So it's almost as if at this last Fed announcement, the Fed came out and said, well, heck, if we can't flatten the yield curve and maybe create a recession by raising the short-term rates, well, then, heck, we're going to do it by lowering long-term rates. And when they came out and said that they're going to discontinue the reversal of quantitative easing, that's the exact effect that happened. Long-term rates actually started coming down. So it's amazing to me because you have a ton of smart people there at the Federal Reserve, brilliant people, but it almost seems like they're intentionally trying to create a flat yield curve, which I can't imagine why, because that's always something that typically comes right before a recession. So it's either they're cooperating with the president or they dislike him so much that they're purposely trying to create a recession just so that they can make him look bad and not get reelected. Sounds crazy, but it's one extreme or the other, Kerry.
So, we see this. I guess you should really explain the nature of the flat yield curve or the inverted yield curve and why that is such a big deal, because many of you out there aren't familiar with these terms and how important they can be to your own personal finances.
So the yield curve is just a fancy word that economists use, financial people use to describe the extent to which long-term rates are higher than short-term rates, because traditionally long-term rates are higher than short-term rates, right? If you're going to borrow money longer, you have to pay a higher interest rate. If you're going to tie your money up longer by buying a longer-term bond, you're going to demand a higher interest rate. That's pretty typical. And typically when long-term rates start to come down and get equal with short-term rates, it's a sign that we're having a recession. It's a sign that the reason long-term rates are not high is because people are really concerned about the economy long-term, i.e. we're going to a recession. But the opposite is also true. Sometimes long-term rates that are artificially suppressed that create that equality between long-term and short-term rates can actually create a recession. And the reason is because think about how banks get paid, right? Banks need to pay depositors short-term. Even CDs are relatively short-term. So they pay them based upon a short-term interest rate. And then most of the time when they're lending money back out, they're lending money out at a longer-term interest rate. So they're collecting more interest through their loans than they're actually paying to depositors. That's how banks make money. Well, if short-term and long-term rates are the same, banks can't make any money anymore by taking depositors' money and making loans. If banks can't make money lending, then they simply won't lend. And if credit stops or slows down significantly in this country, that will actually create a recession as people can no longer borrow to buy real estate or to buy new cars. Businesses are going to have a tougher time borrowing to buy capital equipment or to hire new employees. And it can create a recession. And that's why I think this last move in the Federal Reserve was so crazy. It's almost like they're intentionally trying to create a recession. I mean, I can't imagine that, but from the outside looking in, that's exactly how I felt when they made this last announcement only 3 short weeks ago.
You're almost sounding here a little bit like a conspiracy theorist as the...
I know, and I hate that. That's not me, but you have to look at the evidence and say, what is going on here, you know?
Yes, for sure. And certainly if it quacks like a duck, right? But we've seen them do things that in the short run don't necessarily make any sense, but maybe in the longer run do, because let's face it, they've got much better information than anybody else in the world, correct?
Right.
So,
and that's my thought. Either they're so smart that they're seeing stuff that I'm not seeing and the rest of us aren't seeing, or they're just trying to make the president happy, which I think was, kind of the direction that you were questioning earlier on. Or, as I said, they're doing the opposite. What I do know, though, Kerry, is that throughout almost all of history, I would say more than half of the recessions were created by the Federal Reserve, whether they're changing interest rates too much or too little or too early or too late. It's this over manipulating of the economy, if you will. It's the thought process that they can do just about anything. And, there's a natural biorhythm to things and how they work. So it shouldn't surprise anyone that when they try to over manipulate, that sometimes, we get side effects from that.
Yeah. And, it's kind of like any other government plan. Like when you look at daylight savings time, trying to get more light out of a day, it's 24 hours. There's nothing you could do about it. You can kind of shift things around a little bit, but you can't really change the day, right?
That's right. It's true. You try to give people more time when they come back from work, but then, what do? Kids are walking to school in the dark in the morning. So there's always a negative for every positive that's attempted, for sure.
Yeah, well, I remember this old saying. I'm sure it's apocryphal and it was never really said, but an old wise Indian elder once said, the white man trying to put more hours of daylight into the day is like cutting the bottom edge of a blanket and sewing it onto the top and believing that you've got a longer blanket. And maybe that's what the Fed's doing here, To
some degree they are. And here's the reality. You can't, you and I could take some sort of stimulant and try to stay awake longer and try to have more energy, and it might work. And then eventually we need stronger stimulants, and then maybe that'll work. And then eventually you get to the point where no matter how strong the stimulant, it just isn't going to work anymore. It's going to lose its effectiveness, and we just need to rest.
Yeah.
And to some degree, the economy is that way too. I mean, it's been artificially, I think you and I have even talked about this before. The economy's been artificially stimulated now for about 30 years. I mean, that was how long ago the first liar loans, those same mortgages that almost brought us down 10 years ago during the financial crisis, that 30 years ago was when those had begun. And also car leases. You know, it was about 30 years ago when people started to think, oh, I can have a new car every 2 or 3 years. And, you know, why? Because I can lease it. And all that did was increase our economic activity, increase our GDP artificially, because people are buying more goods and services more frequently. And I think we're getting close to the point where there's a day of reckoning for all that. And that's why, you know, I think the administration is so frustrated, because they're wondering, gosh, why can't we see this 4% growth? The president loves to blame it on the Fed. And I agree the Fed maybe didn't make the best moves over the last year or two, but I think that we wouldn't have had 4% growth. Like, I'm pretty sure we wouldn't have had 4% growth on the GDP, even had the Fed done everything the president wanted.
Yeah, because you can't add that. You can't make that blanket longer by cutting a piece from the bottom and adding it to the top. That would really be
work.
Financial alchemy.
And then all you smell is feet when you're trying to sleep. That's the other problem with that, by the way.
Yeah, there's so many things in life that are just like that, David, that you can't, you know, no free lunch other than for the when you're getting it for free, it's great. But later on, when the whole thing collapses because you've been eating free lunches for the past 40 or 50 years, maybe it wasn't so free afterwards. Eventually, there's a day of reckoning. There'll be one here. David, where is the best place to connect with you on the web these days?
Best place to go right to our website. Our website is soundincomestrategies.com. Again, soundincomestrategies.com.
All right. And as always, there's a link in the show notes to your site. I suggest you go take a look at it. And hey, we'll see how smart all these guys are. You know, it seems like half of Larry Kudlow's day is consumed by damage control for things that Trump says or intimates or implies. It's got to be a tough job. You know, when he was asked why he took the job, because I don't think he particularly wanted to be the director of, you know, the economic council, the president's economic council, he said when he was down and out and he had some substance abuse problems and such, he said the only person that stuck by him was Donald Trump. And when Trump asked him to serve, there was no way that he could say no. So tells you something, because I'll tell you what, the Federal Reserve, nobody is sticking by them. You know, they're going to get hit no matter what they do, right?
Unfortunately, they've been the whipping post of many a president, not just President Trump.
Yeah. Yep. So, hey, well, I guess we'll have to sit back, see what happens to rates, see where the economy heads. But certainly things appear to be softening. Employment numbers last month were pretty decent, but the 2 months before were not so decent, right? So what do you know, we didn't talk about this, but the question of the generational lows, actually 50-year lows in new claims for unemployment insurance, certainly is indicative of a top, but it's been going on this way since Trump got into office here.
It has, and to some degree, he is reaping, the benefits of what the Federal Reserve had done. I would say excessively, but nonetheless, what they had done after the financial crisis to get things moving forward. And of course, as you know, a lot of the reason the unemployment rates are so low is because there are a lot of people during the financial crisis who got out of the workforce. They looked for work, they couldn't find work, or they're what's called underemployed because maybe they found something part-time, but they really wanted full-time. They're no longer part of that government unemployment statistic any longer. And they've just, so they're now considered by the government, instead of being unemployed, they're considered to be retired, even if they've retired at prematurely and they've retired maybe at a financial level that's less than what they would have liked. Nonetheless, they're no longer part of that statistic. But that having been said, hey, our economy is the best it's been in more than 10 years. You know, and I know it. And
very true.
You know, so even though it may not be what we've seen in the 90s and early 2000s, it's still doing well, and it's doing better than the economies in many other parts of the world, frankly. So
very true.
I'll take it. For now, I'll take it.
Yeah, for now. But sustainability wise, well, we're just going to have to see. Eventually, as we've talked about many times in the past, David, debt is going to have to be dealt with one way or the other, right?
Yeah. Well, that's a really big concern, you know. And I was just telling my CPA this morning, actually, because, you know, it's like the shoemaker with no shoes, right? You send your taxes in on April 15th, even though you're in the financial industry. But I was just telling him this morning, I said, you know, we were talking about some of the taxpayers in the higher tax states, the New Jersey's, California's, the New York's, Connecticut's, that, you know, that if they raise taxes anymore, there's going to be more of a mass exodus, people changing their residence to you know, states like Florida, Washington State, and so on. And I said, you know, it'd be interesting right now if they said, you know, we're going to raise the top marginal bracket by 10%. But in exchange for that, the extra 10% was going to go to start to pay down the national debt. I said, you know, I'd sign up for it. It might be almost like enlisting in the military where you don't get drafted. You say, fine, I'll do this. But I would actually sign up for that because I think it's the right thing for the country long term. Unfortunately, as long as politicians are going to be politicians, if the top bracket goes up by 10%, you know as well as I do, it's not going to be used to pay off debt. It's going to, you know, it's going to get spent in other types of programs. It'll be gone as quickly as it came. We
know that. Well, I'll tell you what, when it comes to paying taxes, I would prefer to be a conscientious objector, but they don't buy that. You can use that to avoid serving in the military. But if you're a hardcore libertarian who it's your religion and you don't believe in paying taxes, that isn't going to work out too well for you, is it?
No, you have tried that before and unsuccessfully. So, as you did, I wrote my check this morning and we sent it in. And
yes,
let's just say happy hour might come a little bit earlier today.
I was starting last night, honestly. I figured a day early. Hey, we would be remiss if we didn't talk about this march towards socialism here and the AOC bots. And, you know, now she's after the New York Post, trying to drive them out of business by getting advertiser boycotts, which generally don't work in the long term. And the thing is, the New York Post has never made any money ever in my lifetime. And what she's doing, so Murdoch has to put in a bigger check to cover the deficit, right? And it'll probably bring them increased readership. That's right. And, you know, I guess if you're a billionaire with a B, it's worth a few bucks to be able to promote your political beliefs. So that's okay. Yeah. Well, it's almost like, I think some folks look at it as maybe a charitable contribution of sorts. And, was started by Alexander Hamilton back in the late 1700s. It stumbled and gone on for, over 200 years. So we'll see if she will be the final nail in the coffin or not. But it's not good when politicians lead economic sanctions against lawful corporations just because they don't like what they say. And that's just an example of socialism on the march. Anyway, hey, we've got to run now. Just again, David, just tell us where we find you. Sure. Again, it's www.soundincomestrategies.com. All right. And like I said, show notes contain the link. Just click it, take you right there. Hey, questions, comments, again, KL@KerryLutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. And if you're listening on YouTube or on a podcast platform, please subscribe, like, and share. Really helps me a lot when you do that. Helps get the word out and really gets ideas that people desperately need for their financial solvency and future. David, we'll talk to you again real soon. Thanks so much. My pleasure, Kerry. Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.